Hello. It's your boy Rahim and welcome to this video. In this video, I'm going to share how you can buy 10 houses in 2 years. Within 2 years, I will show you how you can leverage in property to ensure you make most out of your property investment journey. So really appreciate you all for liking the videos, watching it, sharing with friends and family. I really appreciate that. And if you think any of my videos are making sense, or especially this video, if it's going to be making you sense, don't forget to hit the like button below, subscribe to my YouTube channel for more of these amazing videos. And also liking the videos, sharing them also helps my algorithm push on the videos to more people who, like yourself, who would need to learn property investment. Okay, so there's so many investment strategies out there right now. Some people are investing in stock and shares, some are investing in Bitcoin. Before I go into how you could leverage in property to buy maybe 10 properties that will generate you over £36,000 a year, I just wanted to talk to you really what are the main investment millennial like ourselves are investing right now. So I'm really want to jump onto the computer so I can share this with you so you can see exactly what are the kind of stuff the millennials are investing in compared to property, and also why I think property could be the best investment you could ever make in your life. So let's jump onto the computer. Right, okay. So us millennial, lots of us are either investing in stock and shares, Bitcoin, maybe minorities of us are investing in real estate, which is property. So what I want to do basically is to give us an example of how we could leverage in property first before I explain to you the idea of how you could buy 10 properties in 2 years. Okay, so that is the main objective of this video tutorial today. So, as I said, real estate, stock and shares and Bitcoin is what everybody is buying. So, let's now assume we have £100,000 to invest. The options we have is either to buy properties or to buy stock shares or Bitcoin. Okay, so these are the two options we have. Don't worry about how you raise the £100,000. Just assume we have £100,000 to invest and see what are the benefits of buying real estate or investing in real estate. So basically, if we have £100,000, we want to invest in stock and shares. We need that £100,000 to buy the stock and shares and Bitcoin. Okay, what that means, if you want to buy £100,000 worth of Bitcoin, you need £100,000 to buy the worth of Bitcoin, stock and shares as well. And also the bank will not lend you money to buy stock and shares because obviously there's no guarantee on it. Okay, and also even if you had that money, you buy stock and shares, there is no guarantee on your return. The reason why there's no guarantee on it is because one, you don't control the stock and shares you've bought. It's all based on speculations and behaviors of certain individuals within the industry. I'll give an example for stock and shares. If you buy stock and shares, because you don't control it, this stock can go down and up, and you would lose ridiculous amount of money from one silly mistake. So if the director, for example, did something silly in social media, basically that impacts your stock and shares as well. If they investigated him, they find out he touched someone inappropriately, and then that went to the media, again, you will lose the value of your stock and shares. So again, that is another downside of buying stock and shares. And also, we all know during the COVID pandemic, the travel and hospitality industry went down their nails. Again, all the people that invested in travel and tourism industry virtually lost all their monies overnight, especially when we had the first lockdown. They literally some of them lost all their money. I know someone who lost lots of money out of it. The only thing he's got left now is 3 properties that we helped him buy. Again, you can see you're not controlling it. You're just there investing and you don't know what the outcome may be. And the outcome you see is based on speculations as well. And also the reason why I don't like to buy stock and shares is because you don't control it. A director can turn around and say to you, oh, this year we will not be able to pay dividend, or within the next quarter we may not pay the dividend that we promised to pay. They would highlight some different issues why they're not able to do so. Okay, again, that's another downside because you're not in control, right? You don't control your investment. It's based on someone else's decision. And again, they can turn around and actually say, you know what, we're not going to pay any dividend for the next 2 or 3 years. And also they can turn around and dilute your share. What does that mean? The amount of shares you have, because they want to raise a bit more money, they will dilute it, and your shares become lower in value. Again, it's another reason why buying stock and shares is really not, you're not in control, right? It's in control by someone else. And also Bitcoin, exactly the same thing. Bitcoin, similar, it is based on speculations, right? Sometimes it goes up and sometimes it goes down, and you make money when you sell it, or you can use it to transact, but it doesn't really continuously appreciate in value. Okay, so it's based on speculations. Someone else's movement against stock and shares is kind of a bit similar, you know. So again, you can see then, buying stock and shares, Bitcoin, you can really invest in it, but you're not in control. I rather invest in something that I am in control of. And again, you can see what happened during COVID. Lots of companies went bust. Lots of companies lost their shares overnight. What happened to GameStop as well? Some insurance companies lost their shares. So if you invested in those sort of companies, you would have lost your money as well. If it's not all of it, you would have lost most of it. So now let's look at the property side of things now. So if we were to have £100,000 to invest and we want to buy £100,000 property, the number one advantage is you don't need to put down the whole £100,000 to buy that property, right? We would only need to put down 25% of the £100,000, i.e. if the property is £100,000 in this example, we only need to put down £25,000, and the bank would lend us £75,000, which is 75% of the property, to help us buy that property. Again, they will buffer you. With stock and shares, the bank will not lend you money to buy stock and shares, okay? Because they know there's no guarantee on it. But with property, it's an asset. It's a solid asset. It's a solid asset, and it's there. They can lend you money over it, okay? That's one thing, or one of the advantages of buying properties. The second advantage also in buying properties is you own it, right? You can literally see the asset yourself. You can drive past it. You can visit it, you can inspect it, you know, you can walk past it, you can hug it, you can kiss it, you can literally do anything with it. Nobody's going to take it away from you. And a director will not turn around and tell you, you know what, you're not going to get your rent next month, okay? It doesn't work like that. And we all know during the pandemic, the people that were struggling to pay rent, right, the government created a scheme that allows them or helps them to pay rent. Unless if I've missed that news, I haven't seen a scheme that government put out there to help people who lost money in their stock and share or in Bitcoin. Again, that's another advantage of buying property. So the third advantage of buying property also, you make money in two ways, okay? You make money through collecting rent every single month, okay? And also through capital appreciation, meaning property prices goes up. When property prices goes up, you make money that way as well. So you make money in two ways: cash flow and capital appreciation. Again, when it comes to stock and shares, unless the company pays dividend, right, you sat on it and hoping that with the company's strategy, your stock price or your stock level would go up, okay? So again, you're not in control with that, okay? So you're not going to say, okay, I'm going to make that sort of money. And also there's always cap, okay? They may be paying you 50 pence, 30 pence, or even £1 per share. But again, look at that, in £100,000 shares, that's not a lot of money, okay? So again, it depends, it fluctuates as well. Basically, you are not in control. But whereas if it's a property, you put in nice, amazing tenants there who you know is going to pay your rent. They will pay your rent every single month. And then that is guaranteed. Whether property prices goes up or down, you still get your cash flow every single month. Again, that is one of the reasons why I love properties, okay? Basically, you can see it, hug it, love it, kiss it, whatever you want to do with it, right? You can do to it, okay? We are stock and share. We all know what the situation is. Now, let's talk about then how you could leverage from that £100,000 to buy 5 properties. For instance, I'm not going to explain to you how you can buy 10 properties in 2 years, okay? So now let's assume we've got this £100,000. Don't worry about how you raise the £100,000 right now. Let's just assume we've got £100,000. So because now we know we can leverage in property, we rather invest that money in property instead of stock and shares. So what we do, if we've got £100,000, we would go out there and try to buy 5 properties with our £100,000. So how do we do that? Because we know the bank will lend us 25% of whatever amount of properties we're buying. So what we could do then, basically, we can go out there and look for £100,000 worth properties, right? If we've got £100,000 worth properties, the next thing we do, we negotiate at a discount so we can buy these properties at discount. Right? So in this example, we've got £100,000. We want to buy 5 properties. We can go and negotiate and buy the properties below market value. What is below market value? Is buying a property below what everybody would have bought it in the open market. How do we get these sort of deals? We get these sort of deals by finding a motivated seller, something that we could add value to, or approaching constructions company that just started doing construction in an area, or they're about to finish selling the properties that they have built up. These are the ways we could get discount in the open market. Okay, so what we now do, assuming you know what you're doing now, right? You've gone to the courses, or you've been to my property investment course, or you've been my mentee, and now you know how to buy these properties at discount. So let's now assume we have these properties. We went out there, we saw £100,000 properties. We're able to negotiate all those properties at 20% below market value. So in that example, we will be able to buy 5 properties. Okay, we will be able to buy 5 properties. The reason why we're able to buy 5 properties is because we're going to put 20%. We're going to put 25% as a deposit to buy the properties. So that £100,000 properties we're going to buy, because we had 20% discount, that property would we will be buying that property at £80,000. So if we're buying that property at £80,000, with our £100,000, we'll be able to buy 5 properties, because we'd only be putting down 25%. 25% of £80,000 is £20,000. Okay, so we only need to put £20,000, which then allows us to buy 5 properties. The first property, we put 25% down at £20,000, and in average, you will make a net profit per property about £300. The average net profit in a buy-to-let property is about £300. Again, each of those 5 properties would be generating us £300 passively every month. And this is bare minimum, okay? Because I always like to be reserved when I'm doing my analysis. So we've got our first property, £20,000. The second property also would be £20,000. And hopefully we'll be getting £300 net profit. That's our second property. And then the third property, exactly the same thing, £20,000 down, which is the 25%. And then we'll be getting £300 net profit every month. And again, the fourth property, exactly the same thing, £20,000 down, and we got the 25, which is the 25% deposit, and then £300 every single month. And then we've got our fifth property, £20,000 down, and then we have our £300 net profit. You can see then with that £100,000, we're able to buy 5 properties. This is where the magic happens at discount, because we're buying these properties at £80,000 each, and the bank will lend us £60,000 per property, because we only put in a 25% down per property. So we're able to leverage, basically, instead of buying £100,000 stock and shares or Bitcoin, we're able to buy 5 properties. And each of these properties would be generating us £300 net profit. I'm talking about passive income here, okay? You don't have to do anything else to make that money, right? So if you times that by 5 properties, you are at £1,500 per month. Again, I haven't seen a stock or shares or Bitcoin that can generate you that sort of passive income every month. I'm not saying it's out there, but I haven't heard from it. I haven't heard about it, okay? £1,500 every single month for those 5 properties, okay? The icing on the cake. So we've bought this property at 20% below market value, right? So we've used the £100,000, we're able to buy 5 properties. Assuming now, based on the UK house price average, property prices goes up by 7.5% in average every year, right? So in this example, I'm not assuming 7.5% increase every year. I'm only assuming 5% increase within the 2 years, right? If you go back, do a bit of research, go onto the national statistics, find out how by how many percent property prices goes up in average. Over the past 80 years, it's gone up by 7.5% every year. But in this example, because I want to be reserved, to be risk averse, I'm just assuming property prices only went up by 5% over the 2 years. This is ridiculous, basically. It's way, way, way below market, okay? Increase. So property prices goes up way over that. But in this example, I'm just going to assume that's the case, okay? So we now know we bought 5 property using the leverage, right? We now know worst case scenario, property prices would go up by 5%, right? So if property prices goes up by 5%, we would have made money in our rental income and also would have made money in capital appreciation. So now what we are going to do, I'm going to explain to you how does this work. So we bought the properties at discount. The property worth £100,000, right? That's the £100,000 there. But we did not buy it at 100,000. We agreed to purchase it at £80,000, which is the £80,000 there, right? So what the bank did was the bank lent us the £60,000, okay? The £60,000 is what the bank lent us. And we then put down £20,000. And that £20,000 here, that £20,000 there is the 25% we've put down, okay? So assuming that property prices went up by 5%, okay? So the £100,000 property we bought at £80,000 is now worth £105,000, okay? So what we will now do in the second year, instead of sitting on that money, we're going to go and approach a different lender. It could be the same lender, but it is advisable to go with a different lender. You can go to a different lender and tell them, listen, I've got properties, I've bought these 5 properties, and I believe the property prices has gone up, and I believe this property worth about £105,000. Again, this is worst case scenario, okay? So what the new lender would do, which is the bank, they will send their own valuation officers, okay? They will then go and see your property, right? And then they would value that property. So when they looked at the properties, when they're valuing properties, what they do, they look at how much properties have been sold within that area or within that catchment, okay? So they will go and see property prices may have, hopefully have gone up over 5%, but they would go back and say, okay, looking at the road, properties have been sold within the last 12 months for about £105,000 in this example, okay? So they will then say, okay, now we believe that property worth £105,000, but they will value that property at £105,000. What the new lender then will do, the new lender will then lend you 75% of the new value of the property, which is the £105,000. So what then happened with that £105,000? The bank will lend you 75% of that, which is 78,750, right? 78,750 is what the bank will lend you, right? And what you then do, we're going to pay our existing loan, which was the £60,000 here, okay? So we're going to pay the existing loan. So when we pay the existing loan, if you minus the 60,000 from our existing loan, which is 78,750, we've left over with 18,750. Yes, 18,750. Only in capital appreciation, not rent. I'm not talking about rent here. I'm only talking about property prices going up by 5% within the 2 years we bought that property. So where did we make that £18,000, 750? We made that money when we negotiated to buy the property at 20% below market value. This is the reason why I kept preaching, talking about so many things like this. You need to make money from the day you buy your property, not the day you sell or the day you remortgage. So because we were able to get a discount at the initial stage, we were able to pull out 18,750 per property, right? Per property. So if we had 5 properties then, so what you do, if you times 18,750, if you times that by 5, you are at 93,750 in capital appreciation. Not in rent, Nothing like that. I'm only talking about just sitting on the asset, doing nothing. Property prices goes up by 5%. You are on 93,750. Absolute amazing situation to be in from £100,000 properties. Okay, unless I've got my figures wrong, I know 93,750 is nearly £100,000. Okay, let's look at it the other way then. So instead of using the money in something else, so what we could do, we could use some of the money we have already collected as rent. We can add that up to top it up to £100,000. Okay, so what we now do, we use that £100,000, we go again and buy 5 properties. Okay, so instead of actually spending that money randomly, we can then go back, buy ourselves in 5 properties. That then gives us 10 buy to let properties, okay, in 2 years. Okay, so let me tell you about the 93,750. The good thing about the 93,750 also, it is tax free, right? You don't have to pay tax on it because you haven't bought and sold anything to make that margin. Okay, it's purely based on capital appreciation. Now you can see how amazing it is to buy properties at discount. Okay, so assuming now we've used that 93,750 plus some of our rent, right? We've gone now and buy 5 more properties. So with 5 more properties on top of the 5 you've already got, you are on 10 properties. Okay, with those 10 properties, your monthly net cash flow is £3,000. £3,000. Some of these figures are basically financial freedom figures for some people. If you've got these 10 properties, you've got £3,000 a month. You don't have to work for anybody, right? And the numbers become so amazing, not just amazing, because you can do the same thing. After every 2 years again, you can go and remortgage, buy 5 more properties. After every 2 years, go and remortgage, buy. You'll be able to buy even 10 more properties because the numbers keep compounding. It's absolutely amazing way to create wealth. I cannot emphasize enough how important it is for you to do this, okay? Don't worry about the 100,000, how you to raise the £100,000. I will also talk to you in this video, at the end of this video, how you could raise the 100,000. Again, if this video is making sense to you and you're learning, don't forget to hit the like button below and also share this video to friends and family who may learn from it as well, okay? So we are at a net cash flow, a monthly net cash flow of £3,000, okay, for the 10 properties. Okay, because each property would be generating us £300, and our yearly net cash flow, right, is £36,000, right? £36,000 every year in 10 properties, and that is passive because what happens is that profit you made, that £300 profit per property, also includes paying the agent as well. So meaning that £300 is net profit. So you don't have to do anything, you make that money. A yearly cash flow of 36,000. Okay. And again, this is passive. Okay. So 2-year cash flow, 2-year net cash flow is £72,000. Okay. Again, if you've got 10 properties, right, you would have made £72,000 in rent, right? Just collecting rent plus capital appreciation, which is 5%. Okay, so again, this is how you create wealth. Hello, this is absolutely amazing, absolutely amazing. So if you've been thinking about properties, investing in property, it's about time for you to think about it nicely because it's an amazing way to create wealth. So that's just rent we're talking about now. Let's talk about the house value. The properties you've bought would have worth £1.5 million. So £1,050,000 is what your 10 properties worth. You become a property millionaire basically, okay, in 2 years. In absolutely 2 years, because each property would have worth £105,000. And the good thing about this, you have a mortgage loan of £787,500. Guess what? That loan is not paid by you, right? It's paid by the tenant because the tenant pays you the rent, so you then pays back the interest. Okay, so basically, you've created a wealth, a cash pot that will generate you lots of cash flow without doing anything, absolutely anything. And also, you would have sat with 262,500 equity. Okay, that is equity that also sat there. Okay, it sat there. You can use it, do whatever you want to do with it. Okay, so again, this is the way you can buy 10 properties in 2 years. And again, don't wait to invest in property. Invest in property and wait. Okay, it's an absolutely amazing tool to create wealth for you, your family, your entire generations. Okay, these are the ways you could create sustainable investment without being worried, being sacked, or being made redundant, because you know you have a positive cash flow coming in. I really hope this video has been helpful. If this video has been helpful and you've learned about this strategy, don't forget to hit the like button below, subscribe to my YouTube channel for more of these videos. And again, I'm not advising you here to go and do this right now. What I would advise you to do, basically, educate yourself, right? Have a mentor or a coach who would guide you, who would help you get this property at a genuinely discounted price, so you can invest your future for your family, for yourself, and then obviously for your entire generation. Again, raising these finances, if you've been watching my videos, there is a video somewhere in the link above here. Check to see how to raise finances to raise the £100,000. And again, if you ever want to join me in my free property investment crash courses, there's a link on this video. Click on that link to book yourself in for one of my property investment event, and it's completely free. Literally free. You don't have to pay anything. On that, you'll spend a day with me where I share all the most recent property investment strategies that investors are using to make ridiculous amount of money for them and their family. And also, if you want to speak to me personally, there's a link on the description below also for you to book a free strategic call, a free 30-minute strategic call, no string attached, absolutely nothing attached to it. You can ask me as many questions as possible. I can also give you an overview of the property investment strategies, and also you can tell me really what you want to do when it comes to property investing. And again, it's an opportunity for you to get to know me get to know you, and find a way to see if we may be able to help you. Okay, and then again, if you like this video or any of my videos, don't forget to hit the like button below, subscribe to my YouTube channel for more of these amazing tutorials.